Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's happening in the Russian economy. If you've been following the channel, you'll be aware that Russia has severely limited the amount of information that it's releasing to the West. However, fortunately, the Russian Ministry of Finance is still publishing headline figures, which give us an indication as to what's happening with oil and gas revenues, non-oil and gas revenues, expenses and the overall deficit for the Russian economy. And the figures for June 2023 have now been released, so we now have the full half-year results for this year. And in today's video, I want to walk you through exactly what's happening with oil and gas revenue, non-oil and gas revenue, Russian expenditure, including expenditure on the war in Ukraine, the overall deficit for the Russian budget. We'll then have a recap on the situation with regards to Russia's reserves and the National Wealth Fund. And then finally today, I'll wrap up with my summary. So what I think is happening in the Russian economy and what's likely to happen over the course of the next 3 to 6 months, and what the implications of that are for Russia and its war effort. Early into the war in Ukraine, President Putin decided that Russia was going to limit the amount of data that it was prepared to release to the West. And the reason that was provided at the time was this was a matter of national security. Russia didn't want to let anybody know what was actually happening with regards to the sanctions and the impact on its revenues. And as you may have encountered, coverage in mainstream media is fairly scarce. We just look at what's happening with the headline figures. But one of the reasons that I set up this channel was really to try and dive deeper into matters like this, try to get under the skin of the numbers and find out exactly what's going on. And fortunately, the Ministry of Finance of the Russian Federation publishes detailed figures on its website. So if you go to minfin.gov.ru/EN, if you want to read it in English, and then scroll across to the documents section, you'll find that Russia publishes a whole lot of different information on a variety of different things. And if we scroll down to the document that's entitled Brief Monthly Information on Federal Budget Execution, Cumulative from the Beginning of the Year in Billions of Rubles, and click into that document, you can see that Russia is providing detailed information on its oil and gas revenues, non-oil and gas revenues, a variety of tax revenues and total expenditure. Now, this information isn't presented in a particularly user-friendly fashion. However, what is extremely useful is that you can download it as an Excel spreadsheet by clicking here. Now, whilst it's interesting to look at what's happened in detail dating back to 2011, really what we're focusing in on at the moment is what's happening in 2023 and how that compares to 2022. So in order to make those figures easier to access, I've transposed them into an Excel spreadsheet which dates back to January 2022. So let's dive into the detail by looking at what's happened to oil and gas revenues. Russian oil and gas revenue in June 23 was 3.4 billion rubles, which was significantly lower than the 6.4 billion rubles earned in June 2022, and represented a fall of around 47% for the month. However, if we look at the cumulative situation for the first 6 months of 2023, the total revenue earned by Russia from oil and gas sales was 11.5 billion rubles, which compared to 22.4 billion for 2022 and represented a reduction of over 48%. Now, as we've discussed before on the channel, oil and gas revenues are the lifeblood of the Russian economy. This is basically what Russia has built its wealth upon. Prior to Russia's invasion of Ukraine, Russia was one of the largest exporters of oil and gas globally, and its biggest single market prior to the war was Europe. However, as a direct result of the sanctions that have been applied against Russia by the European Union, that's no longer the situation, and its two biggest markets today are China and India. But the problem that Russia is experiencing is that because of the sanctions and because of the pressure that the West is applying on China and India to limit its purchases from Russia, Russia is still having to offer discounts of around $20 per barrel to encourage both of those countries to take large volumes of oil. And the other major problem that Russia is experiencing is what to do with its natural gas. Prior to its invasion of Ukraine, Russia supplied huge quantities of natural gas via pipelines that it had built directly to European countries. However, the vast majority of those countries are no longer buying Russian gas. And if you follow the channel, you'll be perfectly aware of the controversy and the conspiracy theories around the underwater explosions that took place on the Nord Stream gas pipelines, which run under the Baltic Sea and provided gas directly to Germany. There's still an investigation going on at the moment to try to establish who was behind those explosions. The West is blaming Russia, saying that it self-sabotaged its own pipelines. However, Russia has countered those accusations by blaming the West. Now, almost constantly since I started posting videos on what's happening to the Russian economy, I've received tons of messages from people saying that the sanctions aren't working, there's no impact on Russia, Russia is thriving, it's actually doing better now, it doesn't need the West, this is the best possible outcome for the Russian Federation. However, if we look at the figures, you can see that oil and gas revenues in the first 6 months of 2023 are down almost 50%. And as this is the biggest single source of income for the Russian economy, there is no doubt whatsoever that the sanctions are having a massive impact on Russia. There has been a huge reduction in income, a huge reduction in cash flow. And one of the biggest problems that Russia is now facing is that it needs to find markets for its oil production, because when you have your facilities set up and established, you want to keep them running at maximum capacity. You want to keep drawing that oil out of the ground and letting it flow. Russia doesn't have sufficient facilities to be able to store huge quantities of oil. So therefore, it needs to sell that oil directly to its markets. And when you've got a reduction in your markets, such as Russia's experienced over the last 18 months, that's starting to cause them a problem. And so there is a possibility that if Russia has to stem the flow to reduce the amount of oil it's actually taking from the ground, that could cause big problems for Russia going forward. And as we've discussed previously on the channel, Russia has lost access to a lot of technology because the West has pulled out and a lot of the oil and gas companies are no longer operating in Russia. And if they have production problems and they can't access the technology, that could be a real double whammy and cause even further problems in the oil and gas industry for Russia. Non-oil and gas revenues are the revenue from all of Russia's other commodities. Russia has a vast array of different commodities that it sells all around the world. And the official results for the first 6 months of 2023 show that non-oil and gas revenue was 28.7 trillion rubles. And that compared to 27.2 trillion for the first half of 2022 and represents an increase of almost 1.5 trillion, or around 5.4%. Now, as I said at the start of the video, the information that's being provided by Russia is limited at the moment, so we don't have a breakdown as to what this non-oil and gas revenue actually relates to. But I think it's interesting to look at the profile as to what's happened in 2023. In January, non-oil and gas revenue was 931 million rubles. In February, it increased to 2.2 billion. In March, it increased again to 4 billion. In April, it increased to 5.5 billion. In May, it increased to 7 billion, and in June, it increased to 9 billion. So that obviously represents a huge ramping up in non-oil and gas revenues. And if we look at the same 6 months for 2022 to establish whether or not this is a seasonal pattern, you can see that in January 2022, non-oil and gas revenue was 1.3 billion. In February, it increased to 2.4. In March, 4.2. In April, 5.2. In May, 6.4. And in June, 7.6. And if we look at the second half of 2022, in July it increased again to 8.6, in August 9.8, in September 11.2, October 12.4, November 14.1, and December 16.2. So what the 2022 figures show us is that there's no seasonality, there's no marked spike and dip in terms of these figures, but rather what we have is a never-ending increase in non-oil and gas revenues. And there is no clear explanation as to what's going on here. But when you take a step back and look at the figures, there is a question as to whether or not Russia is balancing off the fall in oil and gas revenues with an unexplained increase in non-oil and gas revenues. Now, I genuinely have no idea what these non-oil and gas revenues relate to, but it could well be a bookkeeping entry to make sure that the impact of the fall in oil and gas revenues is not feeding through to total revenue. If we now have a look at the total revenue for Russia for the first half of 2023, which is obviously a combination of oil and gas revenues and non-oil and gas revenues, you can see that in the first half of the year, Russia recorded total revenue of 40.2 billion rubles. And that compares to 49.6 billion rubles in 2022 and represents a reduction of 9.4 billion rubles, or around 19%. Now, obviously, a year-on-year reduction of 9.4 billion rubles, or 19%, is bad news. But when you take a step back and look at what happened to oil and gas revenues, where we saw a fall of almost 49%, a reduction of 19% in total revenue actually looks like quite a good outcome. Russia has done really well to limit its total fall in revenue. And as I mentioned in the previous section, I think the big question here is what is going on with non-oil and gas revenues? How has Russia managed to offset its massive fall in oil and gas revenues with income from other sources? Because when you think about the Russian economy and what it's producing, there are no obvious reasons as to why non-oil and gas revenues have performed so well. There isn't a major natural resource that Russia is selling where it's making a fortune, and it isn't providing a wealth of services to countries around the world because most of the big economies have applied sanctions against Russia. So I think there is a really big question mark here as to how the non-oil and gas revenues have stayed so high and offset that huge fall in oil and gas revenues, because you would have expected a 50% fall in oil and gas revenues to actually have a bigger impact on total revenues, because historically oil and gas represented around 60% of the economy. So if you were applying those percentages, you would have expected the fall in total revenue to be more than 50%. The figures provided for expenditure are only given as a total. We don't get a breakdown to see exactly what Russia is spending its money on. But if we look at the figures for the month of June 2023, you can see that total expenditure was just under 15 billion rubles, and that compared to 12.5 billion for 2022, which represents an increase in the month of around 20%. And once again here, I think it's really interesting to look at the month-on-month profile. If we look at the expenditure for January 23, it was 3 billion rubles. In February, it increased to 5.5. In March, 7.8. In April, it jumped to 10.8. In May, it increased to 13.2, and in June there was a further increase to 15 billion. So once again, I'm not entirely sure what's going on with expenditure, but there is a serious ramping up month on month as we've gone through the start of 2023. And this is broadly comparable to what happened in 2022. And if we look at the total figure for the first 6 months of 2023, you can see that Russia has spent around 55.4 billion rubles, which compares to 43.2 billion for the same period in 2022, which represents an increase of 12.1 billion rubles, or around 28%. Now, if we take a step back and have a think about what happened in 2022, Russia's invasion of Ukraine started on the 24th of February, and its single biggest expenditure every single month is investing into that war. So when we compare the two 6-month periods, in 2022, Russia was only involved in the war for 4 out of the first 6 months of the year. However, in 2023, it's obviously been fully involved. So it's no surprise really that expenditure is higher in 2023 because the war is still going on and Russia is still investing heavily into it. If we now have a look at the bottom line figures for Russia, in June 2023, Russia recorded a net deficit of 2.6 billion rubles, and that compared to a profit for June 2022 of 1.5 billion rubles, which represents a negative turnaround of 4.1 billion rubles. And if we now have a look at the total bottom line for the first 6 months of 2023, Russia's year-to-date deficit is now 15.2 billion rubles, which compares to a profit of 6.3 billion for the first 6 months of 2022, and that represents a negative turnaround from profit to deficit of 21.5 billion rubles. And these figures being released by the Russian Ministry of Finance are really interesting because the figures for 2022 show that Russia recorded a net profit of 6.3 billion rubles. However, as I'm sure you'll be aware if you follow the channel, The net deficit that was officially announced for the full year of 2022 was the equivalent of 48 billion US dollars. So the figures that we're seeing in this table are obviously not corresponding to the total net deficit that Russia posted for 2022. There was actually a negative swing factor compared to these figures of more than 50 billion US dollars. And obviously that is a major concern from Russia's point of view, because the figures that they're posting for 2023 show that the economy has made a net loss of 15.2 billion rubles in the first half. However, if there are more losses that are not being shown in this table, then it's likely that the total deficit for the Russian economy could be significantly higher, and that's obviously going to start eating into Russia's reserves. Up until the point when the war started, Russia still had good trading relations with the majority of the world, including the USA, and as a result of this, it was keeping large amounts of foreign currency in banks all across the world in its own accounts. And this is what happens in the normal course of business when you're trading with lots of different countries. You keep accounts in each country in the local currency, and that means that when you need to make a purchase, you can just do a transfer in dollars in the USA, or in yen in Japan, or in pounds in the UK, and it just keeps things very simple because you can receive payments and make payments in the local currency without having to worry about exchange rates and the movement of capital and all those sort of things. So if we look at this table, you can see that the largest single disclosed asset at the time was the gold that Russia is holding within the country. And at that point, it was estimated to be worth $127 billion. Russia is a big fan of gold. It had been building up large reserves of gold, and for security reasons, all of that gold was held in the country. The second largest asset on this chart were the foreign exchange reserves that Russia had built up in China, which equated to around $81 billion. Over the last few years, Russia and China have been building their trading relations, and China represents a huge export market from Russia's perspective. And obviously, since the war started, the focus on China has increased even further. The next largest country on the list is France, and one of the reasons for this is because of the banking relationships. Prior to the invasion, SocGen, the French bank, owned a large Russian bank, and therefore there was a strong trading relationship on the finance side of things. And at the time that the war started, Russia had around $71 billion worth of assets in France. Japan is located relatively close to the eastern border of Russia, and the two countries actually share some oil and gas facilities on the island of Sakhalin. And at the point the invasion started, Russia had around $59 billion worth of assets in Japan. Germany was previously Russia's largest customer in terms of the purchase of natural gas and oil, and at the time of the invasion, Russia had around $56 billion worth of assets in Germany. Despite the fractious relationship between Russia and the USA is next on the chart with $39 billion worth of assets, followed by the UK at $26 billion, Austria, which also had strong banking relations and also was a big customer of Russian oil and gas, had around $18 billion, and Canada had around $16 billion worth of Russian assets. Now, in terms of the colour coding on this chart, this relates to the sanctions and the freezing of assets. The light grey section on the left-hand side, which includes Russia and China, have no implications whatsoever, so there was no freezing of those assets. The red sections are all countries that have applied sanctions against Russia, and all of these countries seized the entire amount of Russian assets. So Russia lost access to all of these assets immediately following the invasion. And the darker grey sections in the middle of this chart represent all of the other countries, and there was a mixture in terms of the response from these countries. But it was estimated that following the invasion, Russia lost access to $350 billion worth of overseas assets. And all of those assets are still being held. They're still frozen. There have been some calls for them to be liquidated and for the money to be given to Ukraine to support the war effort. However, that actually hasn't happened because of the international laws against this. There isn't actually any law that allows any of the countries to legally take the assets, liquidate them, and give them to somebody else. So until the war ends and we have some form of resolution, these assets will remain frozen and are still legally owned by Russia, albeit they can't access any of them. This chart shows the value of the National Wealth Fund in Russia dating back to 2008. Now, the National Wealth Fund is essentially the piggy bank of Russia. This is the cash that Russia is holding in reserve to cover its obligations in terms of its international debt and also to fund any shortfalls in terms of the national budget. And alongside the dates, the three columns that we've got here are the value of the fund in US dollars, the value of the fund in Russian rubles, and the percentage that that fund relates to in terms of GDP. So what we can see here is that back in February 2008, the National Wealth Fund only had $32 billion in it, which equated to less than 2% of national GDP. So at that point, there was a very, very small amount in the National Wealth Fund. If you've been following the channel, you'll know that the losses that Russia incurred in the full year 2022 were actually more than the amount that Russia was holding back in 2008. So that basically wouldn't have covered them to be able to fund that deficit. If we now roll forward through the years, you can see by 2010, the fund was up to around $92 billion. And then stayed at around about 90 billion until 2014. And of course, that was the year that Russia invaded Crimea and annexed that whole area. And a number of sanctions were applied against Russia, and it lost some of its trading relationships. And between 2015 and 2019, we saw a reduction in the National Wealth Fund. And by 2019, it was down to $58 billion, which at that point represented around 3.7% of GDP. However, between January 2019 and November 2021, the National Wealth Fund actually increased significantly, and by the start of November 21, it was up to around $198 billion, which at that point represented around 12% of GDP. So this was a significant bolstering of the National Wealth Fund over that period. And of course, that raises the question as to why that was done. Was Russia planning for some form of event, such as the invasion of Ukraine, when it knew that it would rely upon things like the National Wealth Fund to be able to fund unexpected falls in income? Now, if we move forward to February 2022, which was just before the invasion started, the National Wealth Fund had come back down to around $175 billion, which represented around 10% of GDP. And then by the start of January 2023, it was down to $148 billion, or around 8% of GDP. Now, as I mentioned earlier in the video, Russia posted a net loss for 2022 of $48 billion. And in the first quarter of 2023, there was a further deficit of around $28 billion US. Now, the figures that we've seen in today's video show that the losses are continuing month on month. Russia is hemorrhaging cash. And the problem that the Russian authorities have is that they're having to dig into their wealth fund to fund these losses. And at some point, the wealth fund will run out. Russia will run out of cash. And that's going to put them in a very serious situation. So what's the summary and conclusion today? Well, I wanted to post this video to provide you with an update as to what's happening in the Russian economy. There has been lots of speculation as to the impact of the sanctions that are being applied against Russia. Some people think the sanctions are working really well. Others think that there's been no impact and Russia is actually doing better now than it was prior to the war in Ukraine. However, what we've seen from today's data, which is provided directly by the Ministry of Finance in Russia, so these are the official figures, is that Russia is losing money every single month. Oil and gas revenues have collapsed in Russia. In the first half of 2023, they are down by almost 50%. And oil and gas is the heartbeat of the Russian economy. This is what Russia has built its wealth upon. It has a large amount of natural resources, and over the last 30 years, it's been monetizing all of that. And its main market over the past 20 years was Europe. However, that market has entirely disappeared over the course of the last 18 months since Russia decided to invade Ukraine. Now, it has managed to find replacement markets in India and China, but Russia has encountered multiple problems. Firstly, it's having to sell its oil at a discount to encourage countries to take it from them. Secondly, there's been an overall fall in the market price of oil over the last 6 months as the global economy has slowed down and there are concerns about a recession. So that's impacting further on Russia's prices. And also, Russia hasn't been able to find replacement markets for its lost natural gas sales. Previously, it was providing Europe with gas via pipelines. And in order to replace those lost sales, Russia would need to liquefy that gas, put it onto ships, and then transport it to Asia. And Russia simply doesn't have the facilities to be able to do that. And those facilities are very expensive to build and take a long period of time. So Russia simply won't be able to replace those lost revenues from gas. And what we've seen from today's data is that the overall impact of the sanctions is really hurting the Russian economy. Russia has experienced a massive fall in oil and gas revenues, which is feeding through to the bottom line. Now, in the figures that we've reviewed today, there is a remarkable increase in non-oil and gas revenues. And as I said earlier in the video, I can't really explain what's happening there. There is no logical reason as to why non-oil and gas revenues have increased so much, but they have partially offset the fall in oil and gas revenues. But the bottom line is that Russia is still recording a deficit month on month, And in the 6-month period to the end of June 2023, Russia has recorded a net deficit of over 15 billion rubles, which represents a negative turnaround of more than 21 billion rubles compared to the first 6 months of 2022. So the overall summary of today's video is that the Russian economy is suffering badly as a direct result of the sanctions. It's seen a massive fall in the revenue it's receiving from its single biggest source, and that is hitting the bottom line, and Russia is having to use its reserves to fund these deficits. Russia has a limited amount of reserves, as we see in today's video. More than half of those reserves have already been used funding its deficit, and at some point over the course of the next 3 to 6 months, if the Russian economy continues performing as it is right now, it will run out of cash, and that is going to represent a serious problem for both Russia and President Putin. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.